a state where one quiet beach town commands $4 million a home, while the statewide median slips under $530,000. Welcome to New Jersey Split Screen, where luxury surges and buyers finally catch a breath as rates dip toward 6%. Start with the facts that shape the moment. In February, New Jersey counted 13,201 active listings, an 11.39% increase from a year earlier, even as the total ticked down 2.93% from January. Of those, 6,476 homes were newly listed. The median listing price across the Garden State stood at $529,000, down 2.93% year over year, but up 2.02% month over month. Homes lingered a little longer than the fever days, roughly 45 days on the market, and sellers adjusted 2,210 price reductions in February, 8.76% higher than last year, and 19.59% higher than in January. Over all of this, mortgage rates briefly slipped below 6% for the first time in more than 3 years. A 30-year fixed ranged from 5.98% to 6.11% in February. A 15-year ranged from 5.35% to 5.50%. Nationally, inventory has climbed for 28 straight months. Active listings rose 7.9% year over year in February, but still sits 16.8% below pre-pandemic levels. Listings typically spent about 70 days on the market nationwide, 4 days longer than a year ago. The national median listing price landed at $403,450, down 2.1% year over year. Price reductions touched 15.5% of listings. Against that macro pulse, New Jersey feels like two markets moving on parallel tracks. On one track, luxury enclaves have raced far ahead of the pack. In Tiny Deal, an oceanside borough in Monmouth County just north of Asbury Park, the typical home value reached about $4,200,000 after a 12% rise in the past year, and nearly doubling over 5 years. Lock Arbor, also on the Monmouth coast, hovers around $2,900,000. Along the shore, scarcity is destiny. Bayhead sits at roughly $2,400,000, Stone Harbor at about $2,500,000, and Avalon near $2,600,000. Waterfront land is limited. The price of that constraint is printed in 7 digits. The other luxury axis runs through the suburbs closest to New York City. Alpine in Bergen County carries a typical home value around $2,900,000 after a 12.8% year-over-year increase. Short Hills in Essex County follows at about $2,200,000. Bergen County's Franklin Lakes, Englewood Cliffs, and Saddle River round out a cluster where typical homes slot between $1,500,000 to $2,200,000. Zoom out, and the pattern is unmistakable. 30 towns across New Jersey now carry typical home values above $1,300,000. Over 5 years, the upper tier has seen gains ranging from roughly 40% to more than 100% in some places. At the same time, the mid-market has pockets so hot that even habitual sellers do double takes. In Union County's Westfield, median list prices hover around $1,174,440. In Morris County's Chatham, the median reaches about $1,743,750. In Essex County, a trendy town known for celebrity residence holds a median around $1,332,000. Another Essex County town with deep presidential ties posts a median listing price near $729,500. In Camden County, one well-to-do community is clocking a median of roughly $1,033,750. Bergen County's Mahawa sits at $691,500. In Middletown, Monmouth County, the median sits around $645,000. Nutley in Essex County lands at about $669,975. A Passaic County town, about 20 miles from New York City, posts $686,661. Even a tiny Hunterdon County town built on history sports a median of $642,450, Across counties and price points, certain zip codes still draw multiple offers, proof that hot slices of demand can thrive even as the statewide median cools. To understand what's happening now, watch the North Jersey on-the-ground indicators that tell you how quickly buyers and sellers are finding each other. New listings fell year over year in 5 of 6 North Jersey counties. Bergen County brought 536 new listings in February, down 9.46% from a year prior. Passaic posted 194, down 3.96%. Essex carried 342, down 16.99%. Hudson tallied 358, down 4.79%. Sussex had 144, flat year over year at 0% change. Only Morris bucked the trend, with 340 new listings, up 13.33%. Month to month, as the spring season stirred, Morris leapt 18.06% and Essex rose 5.56%. Bergen edged down 0.74%. Passaic fell 16.38%. Sussex slipped 7.69%, and Hudson dipped 7.73%. Days on market reveal where buyers hesitate and where they pounce. Compared with a year earlier, Bergen homes spent about 38 days on market, a 15.38% increase. Passaic hit 35 days, up 13.11%. Essex reached 38 days, up 13.64%. Morris, at 31 days, was unchanged. Sussex fell 1% to 50 days. Hudson tightened slightly to 41 days, down 0.61%. Compared with January 2026, all 6 counties sped up. Bergen shaved 28.57% off its market time, Passaic 25%, Morris 35.11%, Essex 27.88%, Sussex 27.21%, Hudson 30.51%. Same counties. A different, faster tempo into spring. Prices tell their own uneven story. Year over year, in February, Bergen County's median listing price landed at $792,750, down 0.89%. Essex settled at $546,225, down 0.67%. Hudson slipped to $597,000, down 2.53%. But Passaic rose hard to $566,750, up 13.58%. Morris ticked up to $683,225, up 0.85%. Sussex advanced to $425,000, up 6.26%. Versus January, medians edged higher in Bergen by 2.03%, in Passaic by 3.23%, and in Morris by 1.22%. Sussex jumped 6.26% month over month. Essex nudged down 0.67%. Hudson eased 0.33%. Then there's the price cut signal, small numbers that add up to big shifts in tone. Year over year, in February, Bergen recorded 94 reductions, down 6%. Morris had 40, down 23.08%. Sussex saw 34, down 29.17%. On the flip side, Passaic logged 48 reductions, up 50%. Essex, 74, up 8.82%. Hudson, 106, up 3.92%. Compared with January, reductions decreased in Bergen by 12.96%, in Morris by 16.67%, and in Sussex by 15%, but they surged in Passaic by 71.43%, in Essex by 15.63%, and in Hudson by 20.45%. Even within North Jersey, some sellers blink first and others hold their ground. Put these pieces together, and a causal chain begins to emerge. On the luxury coasts and in New York-adjacent enclaves, scarcity is the spine of pricing. Oceanfront lots are finite. So are large lot suburbs within quick reach of Manhattan. Typical values near $2,900,000 in Alpine and $2,200,000 in Short Hills converge with $2,400,000 $400,000 to $2,600,000 pricing in Bay Head, Stone Harbor, and Avalon. Deal's 12% annual pop to around $4,200,000 shows what scarcity plus demand can do in a small borough. Signals suggest these clusters draw capital that is less rate-sensitive. 5-year gains in top-tier towns running from about 40% to triple digits support that view. In the broad middle of the market, affordability and rates matter more. A statewide median of $529,000, below last year by 2.93%, meets a brief brush with sub-6% mortgages. When a 30-year fixed clips down to a 5.98 to 6.11% range and a 15-year sits between 5.35 and 5.50%. Buyers who stepped back in 2025 start to test the waters again. But supply still shapes their choices. National inventory may be up 7.9% year over year, but it remains 16.8% below pre-pandemic. In New Jersey, active listings climbed 11.39% from a year ago, yet pulled back 2.93% from January. A reminder that momentum isn't a straight line. Now pull in the regional commercial backdrop that frames the state's daily commute math. In February, the national office vacancy rate ranged from 17.26 to 17.6%, depending on the measure cited, as the average full-service equivalent listing rate held at $32.79 per square foot, nearly 2% lower than a year earlier. Across the markets tracked, roughly 28 million square feet of office space was under construction, about 0.4% of total stock. In the Northeast, 3 hubs dominated the construction picture: Boston with nearly 3.9 million square feet in development, Manhattan, New York with more than 2.7 million square feet, and New Jersey as the only other northeastern market topping 1 million square feet in February. Together, those northeastern pipelines comprised about 27% of the national total. In sales, Manhattan closed more than $1.6 billion year-to-date by the end of February, the highest in the country. Listing rates in Manhattan averaged a little more than $73 per square foot, vastly above Philadelphia at roughly $31. In the background, national office sales in February totaled nearly $8 billion across 316 transactions, with an average sale price of $218 per square foot. The gravity of that Manhattan figure matters for North Jersey suburbia in one simple way. Signals suggest that employers and commute patterns likely anchor the premium that Bergen and Essex suburbs command. Back on the ground, watch how those premiums express themselves at the street level. In Bergen County, where a single town like Alpine sits near $2,900,000 for a typical home, the broader county logged a February median listing of $792,750. Days on market there stretched to 38 year over year, but shrank almost one-third from January, down 28.57% as the spring market woke up. Price reductions fell 6% from last year and 12.96% from January, suggesting some sellers found their price without cutting. In Essex County, home to both short hills at roughly $2,200,000 and hotter mid-market towns, the county median was $546,225 in February, off 0.67% year over year and down 0.67% month to month. Days on market climbed to 38 versus a year earlier, but improved 27.88% from January. Price reductions ticked up 8.82% year over year and 15.63% month to month, an indicator of give and take returning to negotiations. Passaic County's numbers cut another way. Median list price surged 13.58% year over year to $566,750 and 3.23% month over month, even as new listings slipped 3.96%. Days on market climbed 13.11% versus last year, but fell 25% from January. Price reductions leapt 50% year over year and 71.43% month over month. That combination, fewer new listings, higher medians, and more price cuts, signals a county where pricing is being tested and adjusted in real time. Across the river valleys and along the ridge lines to the northwest, Sussex County's February told a calmer story. Median list price rose 6.26% year-over-year to $425,000 and 6.26% month-over-month. New listings were flat year-over-year. Days on market nudged down 1% from last year and improved 27.21% from January. Price reductions fell 29.17% year-over-year and 15% month-over-month. Stability with a late winter quickening. Hudson County sits at the water's edge of the New York skyline, and its February numbers suggest a measured reset. Median list price dipped 2.53% year-over-year to $597,000 and 0.33% month-over-month. New listings fell 4.79% year-over-year and 7.73% month-to-month. Days on market eased 0.61% from last year and sped up 30.51% from January. Price reductions rose 3.92% year-over-year and 20.45% from January. In other words, buyers took the wheel a bit more as winter closed. And then there's Morris County, the outlier for supply growth. New listings rose 13.33% year-over-year and 18.06% month-to-month. The median list price reached $683,225, up 0.85% from a year earlier and 1.22% from January. Days on market held steady year-over-year at 31 but accelerated sharply from January, down 35.11%. Price reductions fell 23.08% year-over-year and 16.67% month-over-month. With more to choose from, buyers found homes faster and sellers trimmed less. To see the extremes of what New Jersey offers, step into one precise living example. About 30 miles northwest of New York City, on the west branch of the Saddle River, a riverfront estate at 17 Hillside Avenue hit the market for $1,650,000. It started life in the 1700s as a homestead with a working grist mill, helping feed the area's first settlers. Today, roughly 2 acres straddling Upper Saddle River, New Jersey, and Airmont, New York, hold 2 homes and a detached 3-car garage. The main residence offers 4 bedrooms and 2.5 baths, anchored by a bean-lined great room. A full spa built into the home includes a sauna and a natural plunge pool. A second house rebuilt in 2017 on a late 1700s foundation brings 3 bedrooms and 2 baths. The former carriage house is now a 3-car garage with a studio, loft, and stone fireplace. The setting wraps around a mill pond, waterfalls, and a stream feeding the Saddle River. The property last changed hands more than half a century ago. In a county where typical values in places like Saddle River run into the $1.5 to $2 million plus range, this slice of history at $1,650,000 shows how the past and present meet price in North Jersey's higher tier. Now, swing back to the coastlines that pull buyers from across the country. In Monmouth County's deal, a 12% sprint in a single year took typical value to about $4,200,000. Lock Arbor's typical value rests near $2,900,000. In Ocean and Cape May counties, small enclaves tell the same story in numbers. Bay Head near $2,400,000. Stone Harbor at roughly $2,500,000. Avalon near $2,600,000. Signals suggest that the scarcity of beachfront real estate keeps these numbers aloft because new supply is inherently constrained, even as statewide median prices soften slightly. Over 5 years, the top towns' appreciation rates, roughly 40% to more than 100%, reveal a structural trend, not a blip. In the suburbs tight to New York City, the luxury segment's upward glide has its own logic. Alpine at around $2,900,000 after a 12.8% year-over-year value increase. Short Hills at $2,200,000 and neighboring Franklin Lakes, Inglewood Cliffs, and Saddle River between $1,500,000 to $2,200,000 offer land, privacy, and proximity. Meanwhile, today's hottest mid-tier markets stretch from Westfield's $1,174,000 $440 median to Chatham's $1,743,750, with lively medians like $669,975 in Nutley and $645,000 on Middletown, filling the middle lanes. The dispersion is wide. The demand is targeted. And the data across February shows this mix is holding, even as rates flirt with 6% and statewide medians ease. One more thread pulls through February's numbers. Market pace is normalizing. Nationally, homes spent around 70 days on the market, longer than a year earlier, while in New Jersey they spent about 45. In North Jersey, year-over-year days on market increased modestly in Bergen, Passaic, and Essex, held flat in Morris, and decreased slightly in Sussex and Hudson. Yet month-to-month, all 6 counties sped up markedly. That simultaneous yawning and sprinting, slower than last year, faster than last month, signals a market catching its breath after 2 years of volatility. In the office sector that shapes commutes and corner lunch lines, the Northeastern Pipeline remains unusually active. With more than 2.7 million square feet of office under construction in Manhattan, close to 3.9 million in Boston, and greater than 1 million in New Jersey, the region accounted for about 27% of the nation's roughly 28 million square feet under construction in February. Listing rates in Manhattan hovered a little above $73 per square foot, while Philadelphia sat around $31. Nationally, the average office listing rate was $32.79 per square foot, and vacancy ranged from 17.26% to 17.6%. Year-to-date, by the end of February, Manhattan closed more than $1.6 billion in office sales, with national office sales in February alone nearing $8 billion across 316 deals at an average $218 per square foot. Signals suggest the strength of that commercial core helps explain why Bergen and Essex's high-end neighborhoods that combine land, schools, and a straight shot into Manhattan remain at the top of New Jersey's price tables. Yet even where gravity is strongest, not everything accelerates. Remember Bergen's slight year-over-year median dip of 0.89% to $792,750 and Essex's 0.67% slippage to $546,225 in February. Remember Hudson's 2.53% decline to $597,000. At the same time, Passaic climbed 13.58% to $566,750, and Sussex rose 6.26% to $425,000, suggesting a rotation toward relative value in counties where buyers can still stretch. And in Morris, the supply boost, new listings up 13.33% year-over-year, aligned with faster sales, with days on market plunging 35.11% from January. When options appear, decisions follow. Then, think about price reductions as a quiet signal of confidence. Where reductions fell, down 6% year-over-year in Bergen, 23.08% in Morris, 29.17% in Sussex, sellers met the market sooner. Where reductions rose, up 50% in Passaic, 8.82% in Essex, 3.92% in Hudson. Sellers tested higher, asking prices first, then recalibrated. Combined with days on market moves, these small accumulating choices reveal the market's posture better than any headline median. Across the state, the spine is still supply. Active listings climbed in February, both nationwide and in New Jersey, yet the national market remains 16.8% below its pre-pandemic stock. In New Jersey, active listings rose 11.39% year-over-year to 13,201, but dipped nearly 3% from January, a reminder that individual months can contradict the broader trend. New listings across New Jersey increased 2.4% year-over-year nationally and 10% month-over-month in the national market. Within North Jersey, only Morris showed a year-over-year gain in new listings. Signals suggest that until the pre-pandemic deficit narrows further, prices at the middle will soften only so much, and those at the top will remain insulated by scarcity. Mortgage rates came off their peak and brushed the 6% line, a shift subtle, intense, but loud in psychology. With a 30-year fixed ranging from 5.98 to 6.11% and a 15-year from 5.35 to 5.50% in February, buyers who sat out 2025's tense months found a pathway back into pre-approvals. Rates do not set price on their own, but when they pull fractions off monthly payments, days on market compress, and the next round of comps resets. The statewide median's 2.02% month-to-month rise to $529,000 hints at this lever at work. Luxury, meanwhile, continues to write its own rules. When deals' typical home value climbs 12% in a year to about $4,200,000 and nearly doubles over 5 years, it is not responding to the same inputs as a county median in the 500s. In Alpine, a 12.8% year-over-year lift to roughly $2,900,000 underscores the same truth. To call it a tale of two markets is not to suggest they are unrelated. It is to say that different price bands absorb interest rates and inventory differently. The 5-year range of gains at the top, from around 40% to more than 100%, underscores how limited, high-amenity locations accumulate demand over cycles. On the horizon, a few signals will shape the next chapter. The national office market supply pipeline is modest by historical standards. Only about 28 million square feet under construction across the tract markets, just 0.4% of stock, with a sharp slowdown in new construction starts compared to pre-2020 patterns. In 2019, 20 markets saw at least 1 million square feet starting construction. In 2025, only 3 did. Manhattan alone accounted for 2.3 million square feet of starts in 2025, about 16% of total starts, while West Palm Beach clocked 1.4 million and Boston 1.2 million. As that commercial build-out moderates, signals suggest that New Jersey's role as a residential counterpart to the New York employment machine may stay steady rather than spike, and that could encourage the slow normalization already visible in days on market and price reductions. There is, too, the matter of the ultra-top ends feedback loop. 30 New Jersey towns with typical values above $1 million, $300,000 now form a broad capstone above the statewide median. In Bergen and Essex counties' proximity to New York City, privacy, and land, the ingredients named by the market itself continue to support premium pricing in Franklin Lakes, Englewood Cliffs, Saddle River, and Short Hills. On the shore, towns like Bay Head, Stone Harbor, and Avalon carry prices between roughly $2,400,000 and $2,600,000 because beachfront real estate is both beautiful and scarce. Deal's $4,200,000 benchmark is an exclamation point. In a small borough where new supply is limited, a handful of sales can lift the typical value by double digits in a year. What happens next? Base case through summer. A measured market. Signals suggest statewide pricing stays broadly steady as long as active listings continue to outpace last year's counts and mortgage rates hover around the 6% line. The median listing price at $529,000 may drift within a narrow band as April and May add seasonal volume. Days on market sitting around 45 statewide in February and accelerating steeply month to month across North Jersey likely keep compressing into the mid to late spring window as pent-up listings come online and buyers adjust to the new rate plateau. In the top-tier enclaves, the shore and New York adjacent towns where typical values run from the low millions to above 4 million, prices remain anchored by scarcity, with 5-year gains of roughly 40% to more than 100% forming a floor of expectations. Watch 2 things closely over the next 3 to 6 months. First, the rate tape. If a 30-year fixed holds near February's 5.98 to 6.11% range, buyer activity should keep pressure under days on market. If it drifts materially higher, expect a rebound in price reductions like the February jumps in Passaic and Hudson. Second, the flow of new listings in North Jersey's largest counties. Morris's 13.33% year-over-year increase and 18.06% month-over-month pop standout against declines in Bergen, Passaic, Essex, and Hudson. If those counties pivot toward Morris's trajectory, the statewide market will feel looser. If they don't, Scarcity will keep the middle band firm even as medians slip in the counties that edged lower year over year in February. From a river mill reborn at $1,650,000 in Upper Saddle River to a typical home near $4,200,000 in deal from a Camden County median above $1,033,000. $750 to Sussex's $425,000 value play, New Jersey remains a study in contrasts drawn by hard limits on coastline, on commute time, and on how fast rates can move. If you want to understand where it goes next, follow the numbers, not the noise. If this helped you see New Jersey's market more clearly, stay with us for the next data-driven chapter.